I'm Jeff Lesson. For more, 9701theticket.com.
The following is a paid program. The views expressed on this program are not necessarily those of Entercom Radio, its sponsors, or affiliates.
Good morning. Welcome to the Hardcore Mortgage Real Estate Business Show, brought to you by Capital Mortgage Funding. I'm your host, Harvey Free. We got a great panel this morning. We're bringing a whole bunch. Alex Nafusi across the way.
Hey, buddy. How are you, man?
Hey, Alex. Good morning to you. Of course,
Morning to you,
Brian
sir.
Cohn. We got a reverse mortgage guy in here. Talk reverse mortgages. Hey, Brian, what's going on? You okay
I think I'm
with
better at golfing,
doing
guys,
good.
just so you know.
We'll talk the bracketology and basketball stuff and all that other stuff later, Brian. And we
busted.
We'll get to all that for sure. And mortgages. Derek Brooks from our office. Hey, Derek, you plugged in over here?
Plugged in, ready to go. Very excited.
All right, you bring special
Another
guests.
Spartan. Love him.
Yeah.
Go Green. Great game.
And you guys bringing another Spartan, Ryan Fagan, in, and all the way from Michigan State. And Ryan, of course, you've been a real estate agent for quite some time, and you just moved back to the area. You're actually from Michigan, transplanted out in Denver, and then you came back. You just couldn't stand.
Why would you come
stay
back
away from
Denver?
us?
Why would you ever do
Guys,
that?
thanks for having
Please
me.
tell me there was a woman that brought you back here.
I wish I could say there wasn't, but there was a woman that brought me back.
Well, I guess it's good.
Well, Ryan, you give us all the reasons why you came back to the area. Of course, real estate's booming in Michigan, and you've got a lot to share with us, so that'll be really exciting information. Ryan, you're with the Keller Williams out in Royal Oak, which is now called the Keller Williams Metro Office.
Yes, sir. Yes, sir.
Okay,
Right
very
on
good.
Royal. And then as you go more south, you get into Hazel Park. The aesthetics are a lot the same. A lot of the mid-century ranches and bungalows. So it's not something that's a unique factor there. I think that's more or less a kind of a radius build out of appreciation. And you guys know more than me just because the nature of the
Well, that's
appraisal.
impossible. You're a realtor, so I
Well,
can't
to
possibly.
piggyback on what Alex said, whether you're buying in the high market or buying in the low market, if you're buying in a high market, you're getting top dollar for the house that you're selling. Vice versa on a low market, if you're getting a great deal on a house because of a low market, you're getting less than the house that you're selling.
Right.
So it equals out
Yeah,
either way,
it's-
whatever you do. And the
Absolutely.
market is the market.
What's the next spot to pop? What next city? Pop in a good way, like
what
up.
county? I
Madison
think
Heights.
I don't know, Orange County.
Orange County. Wayne County?
No, in Oakland County.
I think Ferndale right now is going to be increasing because they have everything that maybe a young millennial would like in an area. They have a nice drag. They have restaurants. It's walkable and it's affordable right now. I mean, sometimes there's some things in the Royal Oak market I think that they're lacking.
What
a
is she
certain
priced
type.
out of? Well, it's just expensive, man.
Yeah, I love pushing, not necessarily pushing, but I love, suggesting my Royal Oak clients to people that want to go to Royal Oak. I say, look at Ferndale, look at Clawson, look all over the
Keep
place.
some options open.
Yeah, absolutely. I mean, there's options all over the place.
Yeah, the recent studies have definitely found that the inventory, whether it be the nicer inventory, as Alex would say, definitely some inventory constraints out there, moving the homes, the costs just keep going up and up. It's always about supply and demand anyways, Ryan. It's definitely preventing some families from moving on. And then also one of the things that I'm noticing, I've had some folks more in the retirement age, 62 and above, and again, we're going to talk a lot about reverse mortgages also today, is they've already refinanced. Alex, we've refinanced so many of our parents' aged clients and even people my age. There is no reason to move. They just got a 15-year. They're building equity. The house is affordable. And although downsizing sounds great, it's hard to downsize. You become uncapped. Of course, the property taxes go up.
Well,
the homes aren't
it's
always
so
as
funny.
nice as theirs.
That's what I told Broski the other day. Like every time he's like, we should sell our house or this and that. I'm like, dude, what are you going to do? You're going to buy a house? What? I mean, in the taxes are become uncapped. I mean, your house is paid for.
Right.
I mean, you're better off hiring a full landscape team and a cleaning service, pool service. Than trying to move, man.
It's not always the right move.
Well, there's a unique situation, and you look back at just the basis of why people buy real estate in general, and one of those factors is uniqueness. I can go rent an apartment in a building that's going to be next to another building that looks exactly like that, but as far as real estate, in its essence, you're getting something that no one else will ever have. It's a finite amount. It's a particular house on a particular lot. For instance, I could see myself equally liking 3 acres of wooded land and equally liking a modern townhouse. So I think that your example would be that person doesn't have that life change in them, because I think real estate's usually associated with the life change. Would you guys agree?
Yeah, no, I totally agree.
They're
for
just
sure.
like, they want to downsize, but do they really want to do that?
Dude, my as much as my parents want to downsize, I hate to use them as an example on the air, but they love like when their 3 grandkids come over.
Oh, yeah.
I mean my sister, my brother-in-law, Nick. All my
What's the family
nephews.
get-together house? Yeah, it's hard to leave
dude,
that.
I mean, it's tough to leave that, dude. I mean, it really is.
Well, the thing is, too, at the end of the day, you say downsizing. You think the idea of downsizing would be to save some money, especially in retirement. You don't need as much. Maybe you're traveling more, spending a month in another state, in a vacation state, like Florida, Arizona, wherever it might be. But at the end of the day, you got to make sure that you're going to save money. It doesn't always mean saving money, and a lot of the condominiums come with pretty hefty association fees. And again, we're seeing $300 to $400, even $500-600 association fee. All of a sudden, you're not saving money.
Where is there a $600 association?
Oh, they're out there. They're out there, and they do quite a bit. And
For
again,
real?
you're going to see them going on. Oh yeah, you'll see them out there. 248-539-9797. We always want to hear from you. Again, a little heads up there. If you haven't refinanced your house yet, we have several reasons why you should definitely take a look at it. Refinancing right now to pay off your income tax. Again, it's tax season. Again, you have only till April 15th. If you're not going to do an extension or contact your CPA, find out if you do owe some money, there might be a reason to go ahead and refinance. Also, property taxes. If you're starting to fall behind on your property taxes, another great reason. Take advantage of still what they call 40-year low interest rates now. Find out how you can save money. Again, refinancing to do debt consolidation, refinancing to pull the equity out of your home. You can do a lot of great things with that money and really move yourself forward. 248-539-9797. Again, we'll give you 1 hour of the Hardcore Mortgage Show, brought to you by Capital Mortgage Funding. We would love to hear from you. We have a full staff this morning. And we're definitely going to be diving into reverse mortgages, which are really cool. It's not for everyone out there, 62 and above. You have to have equity built in. But even one of the things, Brian, is some of the folks now are taking a look at purchasing homes and using the reverse mortgage to keep their cash flow.
Yeah, when you say downsizing and a problem in terms of downsizing, and Ryan can probably agree with this, he'll run into a couple and they're looking to downsize or maybe really right size, trying to get into the house that fits their lifestyle more. Well, what happens is they're selling a house that, let's say, is $250,000, $275,000. It could be free and clear. Then they go to downsize. What's the price?
Yeah.
They're not going to downsize price rise. So when the reverse mortgage product, what it will come in is you're basically buying the house at half price. So you're going to downsize. It's a $275,000 house that you sold. You're downsizing into a $325,000 house in certain aspects. Instead of trying to tap into your savings to make up the difference or take out a mortgage late in retirement, you could come up with about $175,000 moving to that house without ever having a mortgage payment.
Yeah.
So it really is a product that will help you downsize more along the lines of right size, because that's really what you're getting into ranches and that, instead of 2-story homes.
Yep. Every time I sit down with you, there's no doubt that I definitely learn something about reverse mortgages. You got to learn about the product. It's unbelievable and can really help a lot of families. All right. When we come back, 248-539-9797. All of your phone calls.
Hey, great news! The Novi Backyard Pool.
Hi, Harry Glantz and Danberg for Capital Mortgage Funding. We do loans everywhere. In Southfield, in Birmingham, in Royal Oak, in Grosse Ile, in Detroit, in Canton, in Northville. No matter where you live, we want to do your mortgage too. That's Capital Mortgage Funding, 1-800-LOW-RATE, the best mortgage banker.
Always give us a call, 1-800-LOW-RATE, the best mortgage banker. That's 1-800-569-7283. You got to have the local people represent you properly. It's all about the education, and again, getting that education behind you, give you the confidence to move forward. I've been talking to a lot of first-time home buyers this year, and I really feel like something changed, hopefully, and it works that way, is that they really do have an earning for the knowledge and figuring out how does this all work. So it's pretty exciting.
Yearning, Harvey. Yearning for knowledge.
Yearning for it. Did I get it right? Yearning? But
That's
definitely
earning for knowledge.
Okay. Thank you for correcting
I
me,
love you,
but I
buddy.
appreciate that. Definitely, though, but it's cool to find out.
I just wanted to talk.
Where do you fit into this home buying thing? And a lot of families, Alex, and we've been getting a plethora of families that have been calling us about taking a look at paying off their land contract. So many families got stuck in that situation where they didn't qualify. They might have did a short sale, and again, they immediately needed to get a new home. Whatever the situation was that put you into a land contract, give us a call now while the rates are still at all-time lows. Also, you can pay off the land contract, and a lot of times, if you qualify, take some equity out of the house to pay off other debts. Again, your land contract holder will be happy to get paid off on it, and more importantly, it could really start building your credit up, as mortgages are typically reported to your credit, always reported, where your land contract's not. So a lot of things you can do to help your financial house out is really get that credit under control. Again, we take your calls here, 248-539-9797. Talk a little bit about the cost of new construction, because, of course, that's what's been going on. The Canadians, actually, that was the first thing. The cost of lumber, a lot of it comes from Canada.
Sports in Vegas. It's going to be a big weekend. With St. Patrick's Day and the tournament getting started, you're going to want to hit the streets and join the ticket for some fun. We've got our own party animal, Pat Caputo, broadcasting from the AAA studios inside Music Town in Hockey Town. Starting bright and early at 10 a.m. The street team and the ticket chicks will be there too. Hockey Town will have a heated patio tent with drink and beer specials all weekend long, and there's no cover. Get out and party this weekend with 97.1 The Ticket. We'll see you today and tomorrow at Hockey Town.
Don't get benched with a busted bracket. With 5-hour energy brackets, you can switch your picks live during the game. Sign up now at 5hourenergybrackets.com from 97.1 The Ticket.
All right, welcome back to the show. 9:19 if you're just joining us. Pretty day out there. Happy St. Patty's Day if you're just tuning in. It's going to get up to about, what do they say, about 45 degrees today in sunny.
40-something. It's got
A lot of
40-something.
Spartans in the studio today.
This is a great day, though, to get out there and look for a house. If you don't have crazy plans, or maybe they're going to kick in a little bit later with the Michigan State game, get out there and call your real estate agent. Get that approval letter from Capital Mortgage Funding. That's right. We're there all day today at 1-800-LOW-RATE, the best mortgage bank. You're going to save a lot of money. Get a real strong approval letter that's recognized by all the local agents here in the area, and that way they'll know that. And it's good, a sense of confidence that they're going to be able to present the offer knowing that they have a local lender and things will go really smooth for you. That's the key. As we were talking this morning, there's a lot of opportunity out there with the built-in equity. Definitely great times to still refinance your house. Derek, we've seen so many. Again, you guys are always all busy in the office, refinancing our clients out of those 30-year mortgages. We've seen so many families drop to the 15-year. And even, I did some calculations the other day. I gave a client a 25-year and moved him forward. Just bought the house a couple of years ago. Yeah. And I showed him a quick figure, an amortization chart. If he was able to send an extra $150 a month on his loan amount, he was going to pay off the house in 14 years. So again,
totally cuts their term down.
Even if you take one extra payment a year, or again, feel yourself. If you're already maxing out your 401k, do you want to put that money?
Feel yourself.
Well, you got to sit down. You got to feel it out with your financial advisor.
What do they say on a 30-year? If you make one extra payment per year,
6.5, 7 years.
Yeah, it turns into a 23-year loan at that point.
Right. Great opportunities out there always to save money. Also, it's your life, so decide how you want to do it. You have to have shelter over your head, and where are you going to live at the end of the day? If obviously, if you're paying a landlord, well, that landlord is savvy enough to understand that home ownership is a great way to diversify his portfolio, and that this is a winner for him. So definitely, if you feel like
don't be knocking landlords, man.
Hey, I know, but if you feel like
I got a lot of tenants out there.
Some of them probably could become homeowners, Alex. Yeah,
they should. Yeah, I mean, they definitely can. And I think one of the cool things is that I do for a lot of people that rent from me is that when their lease is up, I sit down with them and say, hey, let's get you in a house, man. I mean, there's always someone that needs to rent, and to put someone on the right track and get them into a house and make them a homeowner is a great way to go.
Yeah, there's also those people out there that want to buy, don't know that they can buy, and don't know how much they're qualified for or what they're qualified for. Ryan and I, we just started working with a client. He told me, because I've been talking to him for about a year, I said, it's time to look to buy. It's time to look to buy. There's going to be more inventory coming out there soon. He goes, well, I don't have 20%. I said, dude, you don't need
such a misconception, man.
Such a misconception. And, even if you have 3% down, 5% down, he has tremendous credit. I mean, we can get him in, and he's ready. He's ready now, and he's just finally starting to realize that. It's all about just making sure that he knows what he's ready for, and that's what we prepare people to do here.
Well, especially, where Ryan's at in downtown Royal Oak at that Keller Williams office. I mean, the rent down there is, it's insane. I mean, it's expensive regardless, but I mean,
it really is. It really is. It's a great opportunity for our people to purchase their first rental property. And you guys know more than I about people's equity and how they have that. But people don't realize also that they can purchase an owner-occupied house as their second residence as long as they've occupied that first house for 2 of the last 5 years, and they have 20% equity. And in a market that appreciates, you can achieve 20% equity with an appreciation pretty quickly.
Yep, there's not so many opportunities out there.
Wait, what?
That'll be too confusing to figure that out. I think I know where you were going with that.
Yeah, 20% equity in a house. You can buy a second house in owner-occupied financing,
and even with less. Yeah. And even with less, believe it or not,
one of your houses has 20% equity. You can buy owner-occupied the second one.
All right, so Ryan, one of the
I'm completely lost.
It's okay.
Shocking.
Hey, that's just Saturday morning for you.
Shocking.
Ryan, one of the things we were talking about in the past when we had a conversation earlier this week was the negotiations out there and how things get really sticky. There's multiple offers. You've been working with somebody. You're about to make that offer on the house, and you're realizing quickly that hey, there's multiple offers. How do you get, what's your path, or what's your strategy? Do you call the listing agent up? How do you get your offer accepted when you know there's multiple offers coming in?
It's a great question, and it's something that can actually be quite fruitful for the buyer if it's navigated correctly. And it goes back to the seller and the relationship between the listing agent. Obviously, the listing agent represents the seller, but at the end of the day, it's the seller's wants and needs that they perform. So my first thing is, when you do realize that there are multiple offers on the property,
there will be,
it's very important to talk to the listing agent and understand the framework in which the seller is going to be responding to the offer. In multiple offer situations, the early bird doesn't always get the worm. For instance, if you understand that the seller is going to be reverting to, say, a highest and best deadline once multiple offers are received, that's vital knowledge to know. Very seldom can you press a seller to say, well, we want a response Friday night, the first day it's on the market, because they know that more offers may come in. So it may benefit you to speak to the listing agent and understand how they will actually respond, in which case you kind of stay top of mind. I would have my lender call on behalf of my client for another touch, speak to their qualifications, and then possibly reconvene Sunday and understand where they are. Every listing agent is going to disclose how many offers are on the table legally. Whether they divulge into details about the other offers is
Do
up
they
to them.
really, though? Seriously.
If I call a listing agent right now and say, do you have offers, multiple offers, yes or no? Yes.
Yes.
What can you tell me about the offers? The bare minimum I will get is how many offers on the table. My next question, if I can press, is are there any cash offers? And the biggest thing
There's
I think
always
is
7 backup cash offers.
well, you can combat cash. I always think that cash buyers have one foot out the door. And if my clients aren't cash, that's something I'm saying. If my clients are cash, I'm not saying that, obviously,
Right.
the listing agent. But it's just about navigating it best for your client. And if it's really, really highly competitive, if you can get them to a chance where there's a coin flip chance they get the house, I know it sounds terrible, but in 8 offers, if you can be the top 2, one of the biggest questions, and this is from the listing agent side, the most important thing is, Mr. Listing Agent, Mr. and Mrs. Listing Agent, what outside the confines of price is important to your seller? It's going to come down to price usually, but there is going to be a little bit of wiggle room, especially if the listing agent says, you know, my sellers really feel pressured. They'd want a 30-day rent back.
Right.
Okay? And then you're that offer that gives them a 30-day rent back. You might be able to make a really good case at a slightly lower offer in that case, depending on the intrinsic value attached to that seller and what it means for them. You're also going to be up against potentially escalation clauses. Ask the listing agent, what are your sellers planning to do if there's competing escalation clauses, in which case both are uncapped? Now you have 2 offers that potentially were strong by themselves, but together they actually might be a moot point. So the agent's going to tell you, based on their selling style, they're going to tell you either more information or less information.
Do you ever have your clients write a letter?
Alex,
Like,
we're gonna go to a quick break here. It's 9:27.
you know, like I
Did you
love
just
your
join us?
house. You know, I'd love the
Emotion
neighborhood.
does come into play.
Yeah.
We can
Oh,
talk
we're gonna
about
get
that.
into all those
We're gonna
things.
get
Oh,
into
yeah.
that. I have a unique perspective.
All right.
All right, escalation clauses. How to get your offer accepted? Keep it here on 97.1 The Ticket. We'll be right back.
Did you know that more home buyers search Zillow.com?
Hi, Harry Glantz and Danberg for Capital Mortgage Funding. We do loans everywhere. In Southfield, in Birmingham, in Royal Oak, in Groseal, in Detroit, in Canton, in Northville. No matter where you live, we want to do your mortgage too. That's Capital Mortgage Funding, 1-800-LOW-RATE, the best mortgage banker.
Little Detroit music there for you. Welcome back to the Hardcore Mortgage Show, brought to you by Capital Mortgage Funding. 1-800-LOW-RATE is where you're going to find us. 1-800-569-7283. Always call Capital Mortgage. You're going to save money on closing costs. Get the best, lowest interest rates, but get the knowledge you need to make the great decisions.
You know, that's one of the most famous rock and roll guitar riffs of all time.
I like it.
I'm just saying.
I like it. Little
There
local
you go.
music here. Hey, we brought Matt Patani in. We have an insurance agent in, which is great. Matt, you've been awesome so far, and we'll keep things rolling here. Of course, hopefully anyone out there listening gives Matt a call, or even call your own insurance guy and find out what they got going, because that's the one thing we realize with most families is when you look to call the insurance guy, you find out, oh, you're not covered, and it's nice to hear you're covered. I'm going to tell you a quickie is we want to take your phone calls before that, 248-539-9797. But sure enough, Harry, I ended up getting a flat tire on one of those potholes the other day, and I call my insurance.
Did you really?
Yeah, I had a nice
So
one
did my
here.
dad.
7:30. It's dark. It is a one-lane road. Anyways, I pull off in a well-lit area, but more importantly, I called the insurance company and the car insurance, and I'm no names here, and they said, "Oh no, you have towing coverage." And at the end of the day, I was covered. And then they take the car to the dealership, and I had the tire coverage. So I got to tell you, a week, which would typically be Matt and I, of course, we say we're pulling our hair out over here. But the fact of the matter
That's
is,
impossible.
Yeah, you guys can never do that.
Other than a little bit of a hassle, having some people having to drive me back and forth to the dealership, hey, I was covered. And I'll tell you, it took a bad situation and it made it okay.
Sure.
And it's
Well,
fine.
good. Before the break, we were talking about property values, and it's that time of year now where people are putting in purchase agreements, and the market is very hot right now. And people are, slightly overpaying. And I'm using that term. I've got the air quotes going, overpaying. It's really not overpaying if you want that property. However, the appraisal value could come in lower than the anticipated purchase price that you want to agree at, the agreement that you've had to buyer and seller. And people always say, well, Harry, if we agreed to it, if buyer and seller agrees to the price, well, then that's the price. Well, that is a true statement in and of itself. The however is it doesn't have to appraise for what you guys agreed to sell it for.
Here's the
Okay,
thing.
so
You
if
can
I
buy
buy
for whatever you
something,
want.
I can pay whatever I want for
Exactly.
it. And that's a great country that we live in, okay? However, when I send out an appraiser, the appraiser might not agree that the property is worth what you have agreed to buy it for. So what happens then? Property value comes in a little bit lower than the agreed to price, and we have decisions to make. Did we know going in that this could happen? Was it negotiated up front to say, hey, listen, if it comes in lower, we're going to negotiate it lower, or are you going to take your chances, flip a coin, and see what happens? That's the time of year that we're in right now. So don't be surprised if when you go ahead and you decide that you want to make that offer on whatever specific purchase price you guys agree to in the transaction, that the value could come in from an appraiser a little bit lower.
Every day. This is 97.1 The Ticket.
Brought to you by the Michigan Lottery. Michigan State 82-78 winner over Bucknell in the NCAA's last night of the LCA. Miles Bridges 29 points and 9 rebounds. MSU to face Syracuse tomorrow afternoon at 2:40 at the LCA. Syracuse a winner in their first round action yesterday. Michigan taking on Houston. Their Michigan Wolverines a 5-point favorite tonight. It's round 2 of the NCAA's in Wichita, Kansas. 9:40 to tip off on AM 950 WWJ. Biggest upset ever in college hoops. The first number 1 seed to ever lose is Virginia. They get bombed by number 16 seed UMBC. Final score 74-54. Lions add depth in the backfield. LeGarrette Blount signs as a free agent for Philadelphia. 1 year, $2 million. They also re-signed one of their own, Zach Zenner. Red Wings fall to Anaheim 4-2. On the PGA Tour, Tiger Woods now 7 shots behind the co-leaders Henrik Stenson and Byron DeChambeau through 2 rounds of the Arnold Palmer Invitational. At the Ticket Update Desk, I'm Jeff Lesson. For more, 97.1theticket.com.
Download the all-new radio.com app and listen to 97.1 The Ticket anytime, anywhere.
97.1 The Ticket.
All right, welcome back to the show. 9:33. If you're just joining us, a pretty day outside, and a happy St. Paddy's Day to everyone. A little March Madness in there. Of course, we're going to have sports here on 97.1 The Ticket all day long. Keep it here for all your basketball updates and what's going on. Little rumor last night that number 1 seed got knocked off by a 16. They'll be talking about that all day. So
Heard there's a few busted brackets right now.
Oh yeah,
Yeah.
yeah.
What
Pretty
is
exciting
UMBC?
stuff.
My ex-wife went there, so I really don't care if they lost.
It's a lot of fun.
Retrievers.
Hey, a few tips definitely out there for buyers. You're putting together your team, your professional real estate agents, your lender. And again, you get a lot of referrals when you're working with, whether it's your mortgage person might want to refer you to his team, or your real estate agent might want to refer you to his team. But again, understand that you have choices out there, and you can find out the different ways that people go about their business. And, I've met several real estate agents that are extremely successful, and they do things just a little bit differently, and it works. And at the end of the day, you just have to have your needs met. It's so much fun to buy a house. I I think some of the times we see a lot of that. And Ryan, if you want to mention that, sometimes it seems like the fun is out of the picture. And I think it should be fun. I mean, you're spending 6 digits or more. And again, you're going to put a roof over your head for your family to enjoy. You should enjoy the experience.
Yeah, I think so too. I think it's really important that one of these biggest decisions in your life can go well. We've all heard horror stories about how home buying and home selling can go awry, but I think all in all, it's
if you have the wrong people, yeah.
I think it can be a really rewarding experience, and I think a lot of people are, it means a lot to them. You talk to a lot.
You're
of
making
people.
a big lifetime decision here. I don't get how anybody would work with somebody that they did not want to, that they didn't click with at that point. This is something that should be fun. It should always be fun to look into real estate, look into, investing your money in the right smart way, or just like setting up yourself or your family for the long haul here.
Yeah.
So
I think stability is one of those things. I think, equity, appreciation, the tax benefits, you can deduct your mortgage interest, you can deduct your property taxes, and some of the costs associated with a home. So there's definitely a financially savvy side owning your first home, leveraging that asset in later years, and you can really build wealth with homes.
Yeah, there's no doubt. 248-539-9797. Ryan, we talked about that early in the week, that homeowners are definitely more successful. The stats are showing that. They have larger retirement funds. It's just they have a plan and a path. And if you're just sort of wheeling and dealing every day and you don't have a plan that's in place, it's just not going to work out. So again, make it fun. Enjoy your home purchase. Again, for all our veterans out there, always a reminder that VA loans allow you with your VA eligibility to purchase at $0 down. Now, a lot of times our veterans are using seller's concessions and they don't need any money at all to purchase a house. So find out how you can purchase with very little money, definitely a $0 down payment, whether using the VA product or even the USDA product. Again, 248-539-9797. We definitely know that educating our buyers has always been what pays the dividends. When our buyers are educated and they understand the process, they do seem to enjoy it more. And I get it. I think if you're a buyer out there, if you're thinking about home ownership, meet and talk and really build your knowledge bank up by discussing it freely, whether you're with your mortgage person, understand how their end of the transaction, or with your agent and find out what their motivation is and their experience and how they go about finding you the right property.
Yeah, I think the educational gap between the potential home buyer and the home buying process it's definitely there. It's definitely apparent. And so we went ahead and started Michigan First Time Home Buyers, a little company that we use a consultative approach to really put the options in front of the consumer's face, and we kind of grow in their decision making. We're just there to help out and provide them, like you said, the opportunities and what's available to them. For instance, for first-time home buyer, which is defined as anyone that hasn't owned a home in the past 3 years in Michigan, there is a great product.
Thank you for that. We got that.
Yeah.
That's what a first-time home buyer is.
Most
Thank
people
you.
don't know. You could be a second-time home buyer.
No, exactly right. No, I agree.
I just had to make that. I'm sorry.
I agree with you, Ryan.
All these Spartans.
This guy over
all
here.
these Spartans over here.
Stop picking on our guys.
He's chucking so many Spartan jokes in the break, by the way.
I'm a Spartan too. That's why it's funny. That's why.
Spartan on Spartan crime is never bad. It's not a bad thing.
That's why,
We were just
that's why it's funny.
disagreeing during break, and then we realized that we were both agreeing.
We're like legit fighting off the like not physically. Like
Wait, so we're talking about the same thing.
Wait, so we're saying the same thing? Like, yeah, all right.
Okay,
all right.
Yeah, but as
Great.
Ryan was saying, though, he has that great Michigan First Time Home Buyers program, and he's talking to his clients that are first time home buyers, and then they know nothing about the financial side of this at all. They're just saying, well, I finally made the decision that I want to get into a home. So Ryan will take his clients. Ryan will refer them to me or to whoever he refers them to at that point. And then they just start asking questions. And every person's different about their educational level. So, really getting them into, some people don't know what their credit is. So we'll run their credit and we tell them, this is where you're at. This is where you should be. You're good. Whatever the case may be, how much do you have down? How much do you have to play with? What are your assets? Anything of that nature. And they walk away with, a little bit more knowledge. And that knowledge is so powerful to them when they start talking back to Ryan after that point. So it's just about setting up, like you said earlier, Harvey, that successful team around you.
I think first-time home buyers, the one thing that they don't understand that they need to be educated on are things like escrow accounts, tax prorations. Those are things that if they're not brought up immediately, those are items that add $4,000, $5,000, $6,000 to the equation. And when you're talking to a borrower that's
when they don't
3% down, and now you're saying an extra $4,000, $5,000, $6,000 in terms of an escrow account or a tax proration is due back to the seller. I think those are the things that first-time home buyers need to be educated on, because they hear so much, 3% down, 3% down, 3% down. They don't realize the other costs that are involved with that. Sometimes, if you tackle them up front, can be handled with the seller's concessions.
Yeah,
can be handled with a higher rate and lower closing costs. So it is very important for first-time home buyers to go out there, really learn what they're getting into, so that they're not getting a surprise midway through
Brian,
the game.
explain what seller's concessions are, because I don't think.
I was just going to go into as you're posing the question. I guess we can answer it on air for people. The escrow account is going to be the prepaids basically on the account that the bank's going to require, so they have a insured asset. And what people are uneducated about is the cost to close the loan outside the confines of the price.
Right.
We would say let's chuck $5,000 out as a generalized amount to close a loan. And so with this Mishta product, the 1% down first-time home buyer product, it's a soft second mortgage up to $7,500 for those closing costs.
Yep.
And soft second mortgage, I won't go too much into that, but it's non-amortized, non-payment. You owe it back upon sale of the property.
Right, you bring up great points. It definitely serves the purpose. There's usually two hurdles that we have in the mortgage world or any family out there, is the credit situation or the funds to close. And as we just spoke about, there's some opportunities out there with some down payment assistance programs, seller's concessions. Sometimes we can give you a little bit higher interest rate as a lender. We can give you some lender credits back to cover those third-party costs. And all those third-party costs, you've got your taxes and the homeowner's insurance, proration of taxes, and then, of course, the closing costs. So, again, getting that knowledge behind you and setting yourself up for success is key. Also, you have to understand, if you're asking for seller's concessions, you're bidding against these other offers where those families may not need seller's concessions. So you're already at a disadvantage. So you need to understand your disadvantage and then try to figure out a plan with your agent and your mortgage banker to get your offer accepted, and you can become a homeowner.
You bring up a great point. I think that when you're, especially going back to the multiple offer situation, if I throw an offer and it's asking for closing costs, it's indicative of the buyer being a little less qualified.
Yes.
And for that reason, we're a little more wary when we have the conversation with the seller of, well, these people had a great offer, but they're asking for this many dollars. Are they really truly qualified?
Yeah, but how much leverage do you put where they get the approval from, though? Like which mortgage bank?
I always call the lender. Very seldom is there a lender that sticks out. I think that would be like unequivocally bad. But I always speak to the lender.
Sure, there is. A bad lender?
Well, either there.
Does it make a difference? How much weight do you put into who writes the approval for, though?
Well, if it's a pre-qualified letter or pre-approval, I'd like to have the lender tell me that they've run credit, they've looked at assets, they haven't have stated income. I want to, it just depends, I guess. If they're waiving appraisal, which is one of the tools that buyers use, and they're saying that we're going to bring $10,000 up to any appraised amount, then I think that I can ask the lender what their liquid assets. It's not a question I would ask normally, but if they're waiving and they're saying we're willing to bring $10,000 more, I think I can rightfully say, do they have the liquid assets to even approach this?
Sure, that's fair enough.
Right?
Yeah, I was just asking because if your approval's from whatever trunk of the car mortgage, and they're asking for concessions, I think that it makes a difference. Like
totally.
Some of my clients, they just they want concessions not because they need to have them. They're just like, dude, if I can wrap in, whatever, $4,000 in closing costs, in prorations and all that, why wouldn't I take it?
I think if you have a decent a storyline, if you spoke to the listing agent and said, hey, I just want to let you know that we're coming in with concessions for this reason, I think you have a decent story then, but it still looks and feels like they're not qualified enough. It just looks and feels like that. It's
even more, yeah, that's a great point. And even more importantly, Ryan, as you mentioned, they may not have that extra money to pay if the appraisal does come in short. And what we're seeing now is an extremely competitive market where even if you get your offer accepted, you might be $5,000, $10,000, $15,000, $20,000 over what the house is going to appraise for. That falls into the picture. And again, if you don't have the money to make up the difference, or you have the language written in your purchase agreement,
you put a cap on it, though, right?
Well, yeah, usually those are going to put a minimum that they'll pay for it, a maximum that they'd be willing to pay. Not always.
Well, here's the thing. If on paper, in black and white, they're agreeing to do it, but you can supersede that provision in the contract by putting the loan conditions deadline past it. No one wants a raw deal. I'm always wary of the person who's waiving appraisal.
Yeah, especially if you're on the listing side. You want to make sure they have some additional funds. All right, 9:44. Keep it here on 97 The Ticket. We got tons to share with you. We'll be right back.
Hi, Harry Glantz and Danberg for Capital Mortgage Funding. We do loans everywhere. In Southfield, in Birmingham, in Royal Oak, in Groseal, in Detroit, in Canton, in Northville. No matter where you live, we want to do your mortgage too. That's Capital Mortgage Funding, 1-800-LOW-RATE, the best mortgage banker.
Welcome back to the show, 948. It's the Hardcore Mortgage Real Estate Business Show brought to you by Capital Mortgage Funding, live here on 97.1 in our 18th season. Appreciate all the people out there listening. If you want to give us a call, 248-539-9797. Try to give you extremely objective answers to all your questions regarding mortgages and real estate. We're here to definitely help you save money. A lot of great opportunities out there as we see many families have been hunkering down to refinance. Pulling equity out of their house is definitely a good way to go to consolidate your debt and get yourself set up for the future. Definitely find out how it all works. Again, it's usually the closing cost, the interest rate, and then the service, and making sure that that transaction gets done in a timely manner, and that's the key to it. Again, we will take your calls, 248-539-9797. Definitely home prices have been going up. The U.S. home prices from the Case-Shiller Price Index are showing that 6.3% from last year, as all the numbers are still trickling in from last year. But again, we expect a robust home buying season here, Harry. And as you mentioned, you better get your ducks in a row, because in December, January, and what we just experienced in February, which are typically our little bit slower months, it's been multiple offers and such. And we talk about that plan. If you're going to overbid on a house, make sure you put a separate addendum together or language on that purchase agreement with some minimums on there. And so that way all parties have their expectations set up front, and there's no problems, again.
Or be prepared to pay the difference.
Okay.
Between the appraised value and the sales price.
That's not a bad thing to do either.
That's true.
We wanted to thank always Matt Batanti for coming in also from Lenahan Versicle Insurance Agency. So again, if you haven't met with your insurance agency, this time of year would be a great time of the year to do it. We did have, Matt, you mentioned about that serious water problem that happened here back in just a couple of years ago.
Didn't FEMA kick in for that, though, or no?
I don't know if they actually
Well, wasn't the whole city of Huntington Woods? Didn't that flood? Huntington Woods was rough.
A
lot of areas, Warren and everything.
Yep.
All right, welcome back to the show, 948. We're coming up on our last segment here. If you want to talk mortgages and real estate, we have open lines. 539-9797. Always a Capital Mortgage Funny, a 1-800-LOW-RATE, the best mortgage banker. That's 1-800-569-7283. Always here to help you get a house. Again, we're going to have sports here all day on 97.1 The Ticket. First, a little bit of handling your business at home and making sure you're doing the right thing. We've spoken all morning about some great opportunities out there, but really the vibe has been in Southeast Michigan since about 2008 or 9 that the values have just tremendously gone up. We have a lack of great housing around here. The builders are starting to catch up with it. But again, even the stats out there, HUD came out last week with their stats for February. I mean, the housing starts were a little bit off. The weather across the country was a little bit rougher, so that might have played a little bit of a role in it. But we do see a lot of permits definitely starting to heat up around here.
Dude, so 6 years ago, I played golf in a short sleeve shirt. It was like 75 degrees.
Oh,
I'm
on this
dead
day
serious.
a few years ago. Yeah, we
on
get
St.
that.
Patrick's
Today's
Day.
St. Patrick's Day, and I remember St. Patrick's Days in the past where, I mean, it was 75 degrees
Remember at
outside.
Michigan State, we really walk around like in shorts and a T-shirt. It was awesome.
I mean, we could still do that even if it was 20
You drink
degrees
enough, you can do that today too, Alex.
Shut up, Brian.
Hey, Brian, I'm glad you're going to join in with this conversation.
Thanks for chiming in for that, buddy.
Hey, Brian, what are the things about reverse mortgages? I know it's a scary thing out there for so many families, and the reverse mortgages from way back in the day are totally different than they are today. They've gone in, they revamped the program, and they make it work for families. And I think one of the things that people think is that once you have this, that you can't sell the house. But you can. You can sell the house after your loved ones maybe go to a nursing home.
It's a regular mortgage. Basically, what you're doing is you're building in equity when you have the product, and then as you age, you are losing a portion of your equity. But it's built in. The longer you live and the longer you stay in the house, it's a non-recourse loan. So I hear it all the time when somebody says, "Well, what happens if I'm underwater?" I go, "Well, then you won. You lived long enough. You lived 20, 25 years based on the actuary tables. You outlived what they thought you were going to. You won the battle. You got to live in that house for an extra
so your heirs wouldn't get any equity.
Well,
that's what happened.
That's true, but I mean, in terms of that, it also means that if you're not pulling money out of your investments or pulling money out to pay a housing fee, there's a bigger pot for them to split there.
Right.
So
with the cost of nursing home, Brian, it's a great point. I'm going to go back and forth with you on this because, right, if your loved ones can't stay in their house, well, then you're looking for these nursing homes and all these type of retirement communities. These cost money. And at the end of the day, if you can keep your folks in the house, their lifestyle's better and easier for a lot of them. And sometimes it's less expensive. It's definitely less expensive having someone come in to help your folks or you doing that versus full care 100% of the time. Families just won't be able to handle that in the future.
I'd like to go to the villages now. Actually.
It's one of those. I'll sit at a kitchen table and I'll hear the argument by a son or a daughter that then we're not going to get any money. Well, the problem is here. Your mom or your dad are struggling and they need $500-600 a month in order to live. The solution is you give it to them, and if that's not an option, then we have to go into another option where they've got a huge asset, probably their biggest asset, which is their house, and turn the house, which is a illiquid asset, into a liquid asset to help fortify their retirement. I'll give you a quick quote that I saw in Forbes magazine. It was written by a financial advisor, Jamie Hopkins. Not utilizing home equity in a retirement plan is nothing short of a complete failure to properly plan and utilize all your available retirement assets. So if you're just using that house to live in and not using the equity piece and turning that asset into something to help fortify your retirement now, you're not using all the tools in the toolbox.
Yeah, there's formulas and stuff that show us exactly if you qualify for the program, how it works. And I think the key with families is understand there is no payment, so you don't have to qualify. And that's also one of the hurdles for our retiring community. Again, they say that there's 10,000 people getting to the age of 62 daily now. And a lot of these families do have the equity. The equity is the key. If you have the equity in your house, you might not be able to get a traditional mortgage where you can pull that equity out and use that money to live on. This reverse mortgage handles all of that for
Brian,
you.
isn't it way different now than it was 10 years ago?
Well, there's the line of credit attachment that is on there now that is allowing the line of credit that grows month over month, year over year in order for you to access that money. So you're building wealth by staying in there and not utilizing the line of credit. Every study that has now been done with the new line of credit, with the reverse mortgage. Every study that has now been done has proven that it maximizes your retirement dollar to use all of these things in coordination.
Yep.
Your portfolio, your house, using all in one. So you're basically, what you would do is you would draw out of your line of credit after a down market so that you're not draining your portfolio. Because when you drain your portfolio, hey, pensions, if you got one,
If you have
God
one.
bless you,
If you have
but there's
one,
not
yeah.
many left. All right, so if you're just going to bank on your 401k and your portfolios and your investments, if you're having to drain those accounts, that's a scary thing. And so if you can use both your housing wealth and your portfolio wealth and whatever kind of fixed income you're on, use them all and coordinate that strategy, you're going to make your retirement dollar go a lot
Brian,
better.
how do you buy a house? You mentioned before, how do you buy a house with a reverse mortgage?
Well, same way.
If you have a $200,000 house and you're a certain age, and the formula adds out that you have to put down 40%, then you put 40% down, and that 60% that's left over, Alex, is now in a reverse mortgage that you never have a payment for the rest of your life on that house.
Yeah, for example,
That doesn't sound
$200,000, you get a mortgage of 130, 140, you never have a house payment. You know, Brian, it's a great thing for financial planners too that don't understand it. If you're a financial planner listening on the show, be sure to call Capital Mortgage all week long. Brian, I know you've been meeting with a lot of them. You've been going to some of the big New York life insurance companies and stuff like that. A lot of the bigger companies out there.
Long-term care planning, a huge expense that now has to be factored into the equation. And people are living longer and needing more care around the clock. So.
Yep, it's a great program, and again, it doesn't cost you anything to sit down with professionals like Brian and learn all about it. I don't even do it, and when I refer my clients to you, Brian, because it's it's intricate. There's a lot of things to know about it. You got to run the math and make sure it works. But again, a great program out there for a lot of families. Find out how you can save money by calling us at Capital Mortgage.
It's great that we're talking about it too, because I really think that, just having this conversation right here with all the listeners out there, so it's hitting home with a lot of people.
Yeah.
People aren't necessarily, people, my age, your age, everything. They have parents that this program would probably work very, very well for, but they either haven't thought about it. There's like preconceived, notions about it where
it had
they
such
don't
a negative
know.
connotation forever.
A negative connotation about it, and it's not. It's
not
a
like
great
that
program.
anymore.
It's not like that at all. So.
And one of the things is it's not for everyone, and not every home works for it. Again, we talk about it. It's an FHA program, so you do have, if you're in a condominium, if the condominium's not FHA approved, that won't work for you. It doesn't work for, if you're only approved for a certain type of mortgages, it doesn't always work. So find out more about it. Give Capital Mortgage a call. We'll set you up with Brian. And again, 1-800-LOW-RATE, the best mortgage banker. You can find all about more about this program. Wanted to throw in real quick with you, Ryan, real quick before we wrap this up. Definitely, what's going on out there? Do you have some listings out there? If you're working with somebody, what's going on?
Thanks for having me on. I really appreciate it. It went so quick. I was a little nervous at the beginning, but this radio thing.
Oh, yeah, it just flies right by.
You know
It's
what I like
easy.
about radio? No one can see you.
Yes, they can.
Well, not
Facebook
really.
Live.
It's on
They've
Facebook
already
Live.
made
Wait
it.
till you get screenshots on Facebook
A lot
Live.
of
Exactly.
comments.
But anyway, thanks for having me on. For those out there listening that are interested in potentially seeing if they can purchase a home, MichiganFirstTimeHomeBuyers.com. Little online app right there. You can go through there. We'll be the point of contact. Give you a call. See what you can do.
Yeah, it's a great site. I saw it,
man.
and I know that you guys, it's
Good
no
show,
charge
gentlemen.
at all. Definitely
Good
no
work, guys.
obligation.
great
Find out how
program.
you could become a homeowner, definitely. Hey, we're going to wrap things up here, I believe. Is that going to be it? All right, fair enough.
Thanks, guys.
Yeah, good show, gentlemen.
Hey, Ryan, we'll
thank you
definitely
very
have
much.
you back. That's Ryan Fagan from Keller Williams Metro and there in Royal Oak. Hey, for Derek Brooks at Capital Mortgage Funding, Alex Nafusi. For Brian Cohn, I'm Harvey Free. We'll see you next Saturday.
Happy St. Patrick's Day.
Go State, go State, go State.